Merhaba, Master in Growth, hoş geldiniz. How do I, this one? Okay, this is my Twitter. My name is Matthew Johnson. I'm at 500 Startups. This is what I'm going to talk about 500 and me. I'm going to talk about how we put growth and seed investing together. I'm going to talk about how the marketing and analytics tool stack is changing right now. And I'm going to talk about how email and advertising are converging right now. And then I'm going to go into a few 500 portfolio growth case studies. So 500 Startups is the #1 most active seed investor in Silicon Valley and the world. We have 900 portfolio companies, over $100 billion in assets under management. We have Silicon Valley, San Francisco, and Mexico-based accelerators, partners and affiliate funds in China, India, Asia, the Middle East, and Brazil. We have an international focus and a diversity focus. About me, I do distribution, I do marketing, and I do investing at 500. Formerly, I spent time at Charles River Ventures and marketing and growth at companies like Socrata, General Assembly, and Rocket, all that have raised tens of millions of dollars, some very successful, some less successful. Typical startup story. At 500, we have a distribution team that helps our portfolio companies accelerate their growth and 2x, 5x, 10x, 20x their revenue and their user base so that they're more attractive to better investors and make more money and generally become much more successful. We have about 7 people, rotating cast. You'll hear a little bit later from Justin Mayers in the blue shirt on the right there. We're a mix of great people with great marketing background, and we would love to help your companies as well. 500 is a distribution and growth-focused venture capital firm. And there are 2 reasons why companies want to join 500. The first is simply a bridge into Silicon Valley ecosystem and the 500 portfolio worldwide. But the second piece of feedback that we consistently get is that companies want to join 500. They want to take our money because of our distribution and marketing focus to help your startup explode, but in a good way. One reason why at the seed stage we focus on distribution and marketing is because today it is very cheap to start a company today. One reason for that is that there are so many hosted third-party services. Many of our accelerator companies don't even have full-time engineers, and they can spin up, like a compelling entrepreneur who can figure things out, can spin up a profitable, fast-growing tech company with only outsourced engineering. I don't even recommend that. I think it's terrible, but they can if it's a great idea and a great entrepreneur. So we focus on revenue growth because revenue keeps you alive. And I guess Eric Ries, one of the sort of founders of the lean startup, I think he said that a startup is a search for a scalable and repeatable business model. And that's what we think about growth. That's what we think about distribution, is that you search for a way to just make money. And usually in the course of a startup's history, if you can make early revenue, it keeps you alive until you discover how to fly. Very few companies become massively successful right out of the gate, like YouTube becoming acquired for $1.8 billion 18 months after founding because it just took off. Most companies take a long time to gestate until you find the product market fit that really lets you take off. It's overnight success. I guess another quote is that overnight success takes 8, 5, 10 years before that last night when you become a success. So as an investor, why we focus on growth, why we focus on revenue at an early stage is because you can get to revenue early, and it's the best way to find out how to become a giant success. Other reason, downstream VCs increasingly today, because it's cheap to start a company, because it's easy to get to revenue, look for traction. And we generally find that fundraising is either very difficult or very easy. And if you are entrepreneurs yourselves, you might have experienced having a hard time fundraising. But if you focus a lot on growth and distribution and marketing instead of fundraising, then you'll get the numbers that allow VCs to compete over you. And I really think that that's the only way to successfully fundraise, is for VCs to compete to give you money. And to do that, you need millions of users. You need to be growing 10x, 20x, many x. That's the way to fundraise. It's not necessarily pitching, it's just having amazing numbers. It doesn't matter where you come from or what you look like or whether you have an accent, whether you know people in the valley. If you have great numbers, you can talk to anyone, no matter how famous they are in the technology industry, and they will beat down your door to give you money. So growth is the secret to raising money. Up and to the right, this is why the 500 Startups has a distribution and growth team. Basically, we help our accelerator companies make 12 months of marketing progress in growth, analytics, and advertising in 3 months, so that venture capitalists will compete to give you more money. We love international companies. If you have an exciting company that is making money, we want to hear from you. I just heard about this morning one Turkish company that we want to invest in, that we're trying to get into our next accelerator batch. This is my email address, matthew@500.co. Please email me. I would love to talk to you. So I'm going to move into how the marketing and analytics stack is evolving today. It used to be that marketing tools like just sending emails, tracking conversions, tracking how your customers and your users progress through your funnel, take actions, buy a second time, buy a third time, where it's all code that was custom that you wrote yourself. In some ways, this is a good thing, because all the numbers that you tracked had to be important to you, because you spent engineering time to track them. Now, every function, sending email, buying advertising, A/B testing on landing pages, is all a third-party service. It's Optimizely or Mixpanel. So there's also a second group of third-party services, because there are so many analytic services today that are integration platforms. And one of the speakers earlier alluded to Segment.io. We know this company really well. Segment is a product that I would recommend you all use. And the principal advantage of Segment is that it allows you to move faster. The first speaker talked about experiment, experiment, experiment. The faster you can move, the faster you can iterate on your product and your feature set and your user flows, the faster you can find product market fit, a successful business before you run out of money and go out of business. And integration platforms like Segment that allow you to flip on and off tools and advertising channels that may or may not be useful to you is invaluable. It lets you move 2 or 4 or 5 times faster. The third piece that I wanted to talk about is that channels are collapsing together. For instance, historically, the email inbox, email marketing is one channel, and advertising is another channel. Today, people's Facebook news feeds are just as much their inbox as their Gmail inbox, with many tabs, many of which have promotional emails that they don't look at. Same is for a Facebook ad right in the news feed that you may or may not see. This is important for marketing execution. Because marketing and analytics tools are so easy to use right now, the biggest problem for me, as someone who has been working in the industry for a number of years, that I see is that you don't actually have to know what you're doing to start gathering all these numbers. So you run into a problem that we call garbage in, garbage out, where you don't know how important your numbers are. You don't know whether a particular number is important or less important. This is a really important thing to be thoughtful about when now in today's world with these third-party tools where you can collect as many numbers as you want. You can see funnels, you can A/B test. The biggest problem is knowing which numbers are meaningful, which tests are meaningful, which metrics, which key metrics are meaningful. Biggest problem. Important to be thoughtful about it. I mentioned this trend towards third-party services. Yesterday, in past years, Google Analytics has been a tool for a long time. Advertising platforms were something that necessarily were provided by third parties. Today, every piece of the stack is a third-party service that you can buy for a relatively low monthly subscription. This is in-app messaging that's where it's user-to-user messaging. It's a triggered message that someone on your site takes an action. You can send them an email. It's email campaigns. It's integration platforms like Segment. You no longer have to swap JavaScript in and out of your page. It's A/B testing like Optimizely. Even the last year or two, you might have A/B tested by using a Ruby gem that you integrate into your Rails app. 2 years before that, you would have had to build your own A/B testing framework from scratch. Now, A/B testing, at least for simple things like landing pages, is available through just a JavaScript snippet and a hosted third-party service. Ad hoc data analysis. It used to be that you logged into you connected to your primary database and ran SQL queries. Now there are third-party services like Chart.io or Periscope.io to find the important retention and activation metrics that show like which of your users, which of your customers keep coming back, are the highest value to you, convert again and again. It used to be that mobile install attribution, this is currently a pretty big problem, but the pace of innovation in analytics tools is extremely rapid. Now there are several mobile install attribution tools that are just third-party services that are coming online right now that is solving probably what I hear is the most, sort of the biggest problem for mobile entrepreneurs that I see. Predictive analytics for sales. Sales predictions are typically done on Excel using some marketing data, some sales data from Salesforce. The solutions are poor. There's a new crop of startups that have just been funded in the last year or so that let you, if you have a B2B company that sells with salespeople who actually get on the phone, may actually go visit customers to attribute revenue from their customers back to marketing efforts that you are spending a lot of money on the marketing side. You weren't able to do this well even as recently as maybe a year ago. The marketing automation market is something that I'm currently investing in and I think is incredibly interesting. It's a market right now that supports multiple newly public companies like Marketo. Salesforce offers many of these products as well. They offer what I call kitchen sink product suites. They kind of do everything. Often the product suites are built through acquisitions of different companies. The products may not work together very well. This is why customers will buy overlapping products. If any of you are starting a company that does marketing automation or marketing technology, advertising technology, please come talk to me. We invest in this very frequently. Because none of these product suites really solve the few problems that marketers want and need solved, customers are buying 3 or 4 overlapping marketing automation suites and also writing custom code to fill in the gaps. Because these product suites are not very well integrated themselves, because there are this new set of public companies that are struggling to win the market, because these companies are spinning up new business units, there is a ton of acquisition potential at every dollar level. You could be threatening Salesforce or threatening Marketo. You could be a product that they want to integrate into their suite to compete with one of their large competitors. You could have a team that's experienced execs that they think they would want to have run one of their business units. You could just be engineers. Basically, there's a ton of variability in the marketing automation market right now, and churn and competition, which is a great place to be acquired. If I were to start a company today, I would start it in this market. If you want to make a few $1 million, you should do that. Analytics tools progression. Talked about Google Analytics. Basically, it's been around for a long time, best for basically web publishers, kind of vanity metrics. It's numbers that are very high level that sometimes can be important, not usually very good at diagnosing problems or zeroing in where on your funnels, your flows, where you want to be efficient. This is what gave rise to the sorts of analytics products I have listed next, like a Mixpanel, a Kissmetrics, a Heap, that are really designed around funnels, really focused around funnels and events and people to track your individual users and what they do over time. The third, I said bear metrics there. I meant branch metrics and Tune, which has offers. These are mobile app install attribution tools, very useful. The last Chart.io, Periscope.io are analytics tools for doing ad hoc data analysis, building dashboards out of your own user data so you can see the sort of long-term user behavior that's not well captured in sort of immediate funnels that you get in a Mixpanel or a Kissmetrics, maybe a marketplace business, maybe the type of product that is sold after a long research period. Chart.io, Periscope.io, you should look at those. The things that are not well supported in tools right now are marketplaces where you have 2 or 3 sort of first-class objects. You have buyers and you have seller funnels and you have the type of good that they may be buying or exchanging or renting, like an Airbnb. And you would basically need 3 Mixpanel instances to track each of these constituencies, the buyer, the seller, and the product. Mobile attribution, still unsolved problem. A bunch of companies are trying to do this well right now. I've talked about still opportunity there. And better analytics for inside sales companies if you're selling to businesses. Big opportunity there. Marketing automation tools, big suites. You have Salesforce, you have Marketo. Sort of this second level that is more individual rep, which is sort of like an individual. Marketo is sort of semi-automating your email. This is Tout, Yesware. There's a bunch of competitors. Basically allows your salespeople, your reps, to act like they're 2 or 3 or 5 or 10 reps rather than just one. By automatically triggering emails and sending templated emails from their own personal email address that then they can respond to. Companies like BrightFunnel and 6 Sense are connecting the dots between marketing automation and sales revenue. The major problem right now in marketing automation tools is what I call the Goldilocks problem. Tools like a Marketo are maybe too clunky, or tools like a Yesware or a Tout might be too lightweight. Somewhere in the middle, a personal Marketo, big opportunity. Inbox marketing. So I touched on this before. It's my view that email and Facebook newsfeed are converging because email today is mostly a noisy newsfeed, as every company that your users have ever signed up for, whether they compete with you or not, are sending more and more and more email. It makes your message hard to stand out. Facebook and Twitter are becoming inboxes. People are spending less time in email, more time on Twitter and Facebook. And lastly, the major bridge here is retargeting, is similar to lifecycle messaging. Retargeting is an advertising term. Lifecycle messaging has historically been an email term. But now, smart marketers are segmenting their users into smaller and smaller groups and advertising to those people very specific offers on the social web in exactly the same way that they probably have already been sending them email about products that they may have just viewed, similar products to one they might have purchased. So in my view, if you are putting together retargeting, social advertising campaigns, and email marketing campaigns, you should think about them together and use the two channels in synergy with each other. I guess I would say the competitive growth market is also, I mentioned a competition for attention of your customers. Sometimes they're in email, sometimes they're on their news feeds. You need to, you might have a standout brand or a voice that is important to cutting through all the competition. I think of growth, I think of marketing less about competing with your direct competitors and honestly less about serving your customers individually with your product. I think more about all the other products that are not directly competitive and all the other messages that your users, your customers are being bombarded with. And I think about how can you outcompete all those people in the marketplace of advertising, in the marketplace for their attention, whether those companies and those products are directly competitive or not. For instance, if you are spending ad dollars on paid marketing, the way that you can win and the way that you can grow larger is to have a conversion efficiency advantage. That's where a lot of this sort of growth hacking, conversion rate optimization work is important. It's important because it gives you an advantage in your marketing channels. You can pay more than your direct competitors. You can pay more than other companies that are advertising to the same users on Facebook, on Twitter, even if their product has nothing to do with yours, if you have a conversion rate efficiency. Aaron, I think, mentioned before break finding fresh channels to compete asymmetrically. For instance, I almost never recommend startups spend a lot of time in AdWords right now, at least in the United States, because it is such a mature marketplace that most of the other participants that you're competing against are either big companies that are advertising uneconomically because they don't care, because they're a big brand and they can pay an unlimited amount, or they're startups who are also behaving uneconomically and paying too much money for ads because they're trying to test something about their product. They're not trying to directly make money. Unless the reason you should start with AdWords is if you have a very defined point of view why it works for you. But right now, what I generally hear from some of our smartest marketers in our portfolio is that instead of AdWords on search, search marketing is working really well on YouTube. And if you're not buying YouTube, you might want to try that. Lots of cheap inventory that most people don't think of when they think of search marketing. Another way I like to think about marketing execution is that marketers should think like hedge fund traders, where you have a desk and a war room where you recycle your strategies and you re-optimize your campaigns, probably every week you come up with new ideas to A/B test. We've talked about, earlier today, we've talked about experiment, experiment, experiment. One of the previous speakers talked about having 10 experiments running at any sort of 2-week period of time. You should have a cadence, a 1-week, a 2-week cadence. For instance, on Facebook, at some scale, I recommend trading out all of your creative every week for new, fresh creative because of the way that Facebook rate limits the creative variations they show to your users. And I recommend refreshing all your custom audiences on Facebook as often as you can, which is often 3 or 4 weeks. Reallocating your effort every week and thinking about, again, how you can compete unfairly. What are fresh channels? What's your edge? And how much edge do you have? I think Aaron before was just talking about focus. As startup marketers, you don't have unlimited resources to spend 100% of your time and effort in every channel. It's most likely that you will have one channel that you find that you can ride to the next level of success. And the right way to find that and execute is to be thoughtful and explicit every week, every marketing execution cycle, like an engineering weekly stand-up. Where's the best channel? Where should we be putting all our money? And this is against competitors. Again, like I said, it's against everyone else in the marketing and advertising marketplace. I want to talk a little bit more about lifecycle messaging. Yesterday, what happened is you had a cron job that triggered emails within your app for users that reached in a certain state or reached a certain point in their customer life cycle. Today, again, this is mostly, it would be a user that had maybe logged in once in the last week but hadn't logged in for 2 weeks. You'd send them in, and then you'd have a cron job that found all those users, sent all those people an email. That's sort of personalized. It is crudely personalized. Today, through event-triggered converged messaging tools, it could be part of an analytics tool like Mixpanel. It could be part of a dedicated messaging tool like Intercom. Every time a user takes a particular event that is important in their journey as a customer for your app, you can send them a personalized message to see how they're doing, see how they're enjoying using the feature that they just used, seeing what's wrong if they dropped out of a funnel at a certain point, sending it right away. Also for lifecycle messaging, because I've been talking about convergence, just like you can trigger an email from a particular analytics event that happens, you can put together a very small targeted cookie pool for those particular users and show an ad on a Facebook or a Twitter or display a retargeting ad specific to that event. This is how today, this is sort of the state of the art of how you compete in the advertising market today. This is what sophisticated marketers are doing. One thing I talked about earlier, one topic about this convergence between email and paid marketing is this symbiosis between paid and organic. For instance, one of the best tools on pretty much any advertising right now, especially Facebook, especially Twitter, especially in display, is custom audiences. If you are a startup, you might not have that many people that have come to your site previously who have been cookied to retarget to. But if you have a competitive advantage against other companies in your market segment in building a large email list, it might be through meetups, it might be through partner promotion with another organization with a complementary audience. then you will have more email addresses that are renewed more often than your competitors that then you can retarget to. So those audiences are going to perform better than your competitors. You'll be able to pay more. You will win the market by thoughtfully feeding your organic marketing efforts into your paid marketing efforts, rather than keeping these channels and their cost per acquisition, that long-term value separate. One important way to, or sort of point to get to in terms of a well-instrumented business, if you spend a lot of effort and a lot of money on email acquisition, is calculate the value of an email address. Not many companies do this outside of the direct marketing industry. Most people calculate the long-term value of a user in this sort of tech startup SaaS world, and it's sort of someone who's already paid, someone who's already become a customer. If you can back that out with a level of certainty to just the first time you get an email address, one of our previous speakers talked about breaking up the sign-up flow into a few fields and then a few fields later. You can get an email address up front even if those people fall off later and don't ultimately convert. You can remarket to those people. You'll eventually be able to calculate the value of an email address. Important. Facebook retargeting, this is pretty much where smart marketers are making a ton of profit today. It's, I mentioned multiple cookie pools that are micro-segmented. It might be a particular product that you purchased or that you looked at that now you're on Facebook. It shows you that same product, that same particular image. It's reverse retargeting, which is not showing your ads to people who have already purchased a product, as long as you're not in e-commerce where the economics of your business depend on people buying a second and a third time. One of the previous speakers touched on the importance of making sure that you're not paying to acquire the same user twice. Reverse retargeting can help this to exclude users rather than include them. Some of the most sophisticated retargeting is very personalized. Even a company like eBay does this with products. And the most sophisticated are dating apps like a Hinge, I've seen, does this really well, where Hinge will show you the actual profile image and name of someone that you might want to meet on Facebook, even when you're not in Hinge. They can show you someone who has expressed interest in you when you're not even in the app. Again, main problem here, main problem with retargeting in general is being extremely thoughtful about paying for the same customers twice. Usually you can't afford it. Again, so sales automation, I think the sort of evolution right now of sales automation is sales reps have had these manual accounts. They can do the work of one sales rep. Now they have sort of semi-auto email, personal email campaign software like a Yesware or a Tout that allows them to do like 2 or 5 sales reps work. The sort of next step in the sales funnel is these analytics-triggered messages that also go to personal inboxes. All these 3 are like different tools today. They're all converging. Just last week, I had a conversation with the vice president of marketing for a company called Zenefits that is currently the fastest growing, or some people think it's the fastest growing SaaS company of all time. And he says, I have unlimited budget for a personal Marketo, a marketing automation suite for an individual sales rep. Products don't exist. Things like Tout and Yesware are too lightweight, like I alluded to earlier, the Goldilocks problem. Full marketing automation suites are impersonal and clunky and don't do the job. There are opportunities in the marketing technology sector. Now, for the fun stuff, I want to talk about case studies. A current batch at 500 Startups company is Connected to Me. They are Turkish. They are amazing. They're a viral hit. They have a Q&A platform where you can anonymously solicit feedback from your friends, ask them questions, ask them what they think of you, what they think of your clothes, whatever. And what's amazing about Connected to Me is not the original viral anonymous Q&A platform. We've seen over the last few years 2 or 3 companies like this that go viral for a short period of time, but then die because they both don't have business models and don't have staying power. Once you use it once, there's not much of a reason to go back. But what's amazing about Connected to Me is that they actually have a business model. They are the first of these anonymous Q&A platforms where their users are actually paying them for featured placement of their questions, their profile on their site. And anytime you have a consumer viral app with an actual business model where people are paying real dollars, it's an amazingly high potential company. We're really excited about them. They're in our Mountain View office right now. We're helping them get them introduced to Silicon Valley. The couple of the things we're helping them with is, A, how to go viral in the USA. So far, they haven't really gotten into the American market yet, even though they've gone viral not only in Turkey, but in South America, in Europe. Also, how to keep their users and their customers coming back months later, years later, keep paying again and again and again. If we can solve these 2 problems, Connected to Me will be a multi-billion-dollar company, both in our portfolio and a multi-billion-dollar consumer internet hit from Turkey, which would be amazing. Next case study, also in the current batch, is a company called 99 Gamers. They're a used video trading marketplace. They sell both physical console games and also digital Steam downloads. They've figured this out. They're growing super fast. What's amazing about 99 Gamers is this is exactly the right time to be starting this company, because there is this transition between physical media and digital media. Usually in the history of technology, at the times of technology shift, there's room for new massive winners. Also, this is a time when the large incumbent for the game marketplace, which might be eBay, is actually breaking up. eBay and PayPal is spinning off PayPal, literally breaking up. This is why 99 Gamers has an amazing opportunity right now. Also, thirdly, right now is when large engaged communities of gamers are worth billions of dollars, like Amazon buying Twitch for $1 billion recently. They're in 500 Accelerator Batch 11 with Connected to Me. And what's most important about 99 Gamers is continuing to cultivate the marketplace to keep strong ties and measure and make sure that their growth doesn't burn out the closeness of their marketplace. A couple of the interesting things that 99 Gamers is doing is they have enforced a 4-to-1 buy-sell ratio so that you can only buy 4 times as many games or as much value as you can as you have sold into the marketplace. So this is why like a power seller couldn't come through because they're not giant yet and just clean out the whole inventory and kill the marketplace. That would be a big risk. That's what we're trying to mitigate right now. Also, the way they've structured the virtual currency, you can buy currency to then trade for games, or you can sell a game to get credits to get a game. You can never take cash out. So this is a way they're trying to keep the marketplace vibrant and still grow really fast, which is a neat trick. Another case study from our 2 batches ago is TotSpot. It's a mobile marketplace for used children's clothing. What's really interesting about TotSpot is they were the best company from batch 9 that were able to raise $1.8 million very quickly, right during the accelerator. And one of the reasons they were able to do this is because they were out of all the 30 companies in the accelerator batch, they were the best at understanding the very detailed granular numbers, their user cohorts, their long-term value of a customer, their transaction frequency, how often buyers are also sellers, and they're the best in the batch at communicating just their analytics. Even though their revenue numbers were small, they were able to raise a good Valley Venture seed round just by communicating their numbers in a compelling way, showing growth in a microcosm. If you're interested in raising venture capital, this is a great learning. If you can understand your numbers really well, you can raise money even if you don't have tons of revenue yet. If you can tell a compelling story that these numbers show that you'll be able to scale this business to something interesting. Next case study from our previous batch, it's called Care Lulu. It's a marketplace for local childcare and daycare in the United States. This happens to be a vertical that Yelp doesn't serve very well. And again, Care Lulu was able to raise over $1 million from Khosla Ventures before the accelerator was even out, a top-tier firm, even when they were only in one city, in Washington, D.C. It's a very small business, but because they were able to carefully measure and quantify their growth analytics for bringing on new daycares and converting those, each daycare into revenue and leads, they could raise from top-tier VC even when they were only operating locally in one city. Next case study is Shopline. It's like Shopify for Asia. They have some unique experience and knowledge in Asian currencies and payment gateways that, at least today, Shopify is focused on because Shopify is bigger and more focused on this West, and they're in 500 accelerator batch 10. Their growth, they were able to raise VC during our accelerator batch because they worked with the Distro Team and they grew 7 times during the 500 accelerator. That's a great story. I told you before that at the beginning of my talk, even if people don't understand your business, if you have great numbers, you can raise money. It doesn't matter how good you are at pitching. If you have great numbers, if you show great growth, you can raise money. Shopline has an interesting case study on the 500 blog that goes into much more detail about what they did to grow 7x. You can go look at that if you're interested. Lastly, I don't know how much time I have left. I'm willing to take any questions either right now or after my talk throughout the day on 500 itself, on seed investing in general, on the marketing tool stack, on email marketing, on paid marketing strategy, competition. Thank you very much.